Thanks for checking out this question from our daily live Zoom calls. Please like and subscribe to keep learning how we help the largest online community of self-directed retirement investors and entrepreneurs grow and control their retirement funds. There's a frequently asked solo 401k question regarding an indirect rollover from a former employer plan to a solo 401k. So here the question presented is: a former employer closed their plan and sent me a check with tax withholding included. In other words, they withheld 20% of the amount of the distribution. And I'd like to deposit it into my pre-tax solo 401k with Fidelity. I suspect I have 60 days from receipt to do this without tax consequences. What are my options? So option one would be to first deposit the check into your personal bank account. You would then have 60 days from the date that you received the check to deposit it into your solo 401k account. Now, you would, of course, need to gross up the amount. So you'd have to deposit not only the amount of the check, plus the additional 20% that was withheld. So let's say, for a simple concept, that it was a $10,000 distribution. So that means 20%, so $2,000 is withheld and sent to the IRS, and then the check is in the amount of $8,000. So you would have 60 days to deposit the full $10,000. So when you deposit the funds into your solo 401k account, you will need to make the new check payable in the name of the solo 401k, write rollover on the memo section of the check, and deposit the check. Then you would need to work with your tax advisor to let them know that, in fact, you didn't take that amount as a taxable distribution. You rolled over the full amount to your new 401k, your solo 401k, as an indirect rollover. So when you file your taxes the following year, you can claim the refund for that 20% amount that was withheld. The other option would be to not deposit a check that you received from your former employer, but instead ask them to place a stop payment on the check, then ask them to make it payable in the name of the solo 401k. So in other words, don't process it as an indirect rollover where the funds are sent to you personally, but instead process it as a direct rollover with, again, the check payable to the name of the solo 401k. In that case, they wouldn't withhold any taxes, and you'd be able to transfer the entire amount, so the $10,000 in our simple example, directly into the solo 401k. So hopefully that makes sense.